Indonesia is one of the world's largest economies, and they are forecasted by some analysts to become the fifth largest economy by 2045. This is largely because of Indonesia's vast natural resources, massive population, and a land with many opportunities. But despite having abundance in many things, Indonesia actually lags behind when we compare the archipelago nation in terms of gold reserves. If we were to graph out the gold reserves among major Southeast Asian economies, we get to see just how low Indonesia's gold reserves is. Here, you can see that, despite being the largest economy in the region, they actually have far less gold reserves when compared to Thailand, the Philippines, and Singapore, and they are only above Malaysia. On top of being a laggard amongst its regional peers, if we were to graph out the largest gold reserves globally, we get to see just how far behind Indonesia is. Here, you can see that economies like the Netherlands, Poland, and Taiwan, which are all again, have smaller economies as compared to Indonesia when measured using the nominal GDP. And what's even more weird is the fact that Indonesia is very rich when it comes to gold mining. For instance, there's a mine in Indonesia known as the Grasberg Block Cave, and it is expected to produce 14 million ounces of gold during its lifetime until 2041. This 14 million ounces of gold is about 435 metric tons, which easily makes it one of the world's largest ever gold mines. It is located in Papua, Indonesia, and is run by Freeport-McMoRan and Indonesia's state-owned mining company, PT Inalum. So, you can see, Indonesia is not only a large economy with little gold reserves, but it is also very rich in gold itself, as this Grasberg Block Cave isn't the only gold mine Indonesia has. It has more than that. So, it brings us to question just why Indonesia has so few gold reserves, despite having so much opportunity to actually build it up. Is it because Indonesia does not believe in gold as a means to back its economy? Or can it be because Indonesia knows something more than most other central banks globally? Can it be that they don't see gold as a reserve asset, but rather liquid assets like US dollars or government bonds? Well, there are many reasons for this, so let's break it down one by one. The very first reason as to why Indonesia's gold reserves is low can be attributed to the fact that Indonesia doesn't really have a lot of foreign reserves. For instance, if we were to graph out the total reserves by country in Southeast and East Asia, we get to see just how small Indonesia's foreign reserves is. Here, you can see that despite being the largest economy in Southeast Asia, and an economy that is much larger when measured using GDP than Taiwan and just a bit less than South Korea, they don't have a lot of reserves at all. You can see that even Thailand, which isn't a big economy as compared to Indonesia, has more foreign reserves. Likewise, you can see both the Philippines and Malaysia, both economies which are far below when compared to Indonesia, yet they have nearly as much as foreign reserve as Indonesia. What this all means is that one of the reasons for Indonesia's low gold reserves can be attributed to Indonesia's overall low foreign reserves. In case you're not aware of why this is, it's simply because gold reserves belong to the foreign reserves, and that foreign reserves can have assets including gold, currencies, bonds, and so on. Secondly, another reason for Indonesia's low gold reserves can also be attributed to Indonesia's central bank, also known as Bank Indonesia. Bank Indonesia also prioritizes holding foreign exchange reserves, like the US dollar, treasury bonds, and other liquid assets over gold. This can be because of the Indonesian rupiah. The rupiah is vulnerable to fluctuations in global markets. If we graph out the exchange value of the US dollar to the rupiah, we get to see that the Indonesian rupiah has consistently devalued over time. There were years when the rupiah even devalued sharply. For instance, you can see in the graph that in 1997, the rupiah's value to the US dollar sharply devalued in just a few years. These historical issues and the continuous devaluing rupiah can be one of the reasons for Indonesia's low gold reserves, because they would prioritize holding US dollars or other liquid assets instead, as this will allow them to stabilize their own currency. How does that work? Well, take For example, a scenario where Indonesia faces a currency crisis or a sharp devaluation of the rupiah. When the rupiah weakens significantly against the US dollar, Bank Indonesia needs to intervene in the foreign exchange market to stabilize the currency. To do this, they can sell US dollar reserves to buy back rupiah, increasing demand for the local currency and preventing further devaluation. If Indonesia instead held most of its reserves in gold rather than US dollars, it would be much harder to stabilize the rupiah in real time. Gold is a less liquid asset, meaning it takes time to convert it into US dollars or other foreign currencies. Unlike cash reserves, gold cannot be directly used for immediate currency interventions, making it less useful in managing short-term economic shocks. Thirdly, another important factor that you need to understand is that Indonesia's gold mining industry, whilst one of the world's largest, doesn't really keep their golds in their central bank. Instead, Indonesia exports these gold reserves to other economies. For instance, here's a graph on Indonesia's gold exports according to the OEC by year. Here, you can see that Indonesia has exported billions of dollars worth of gold every single year. So, rather than retain it and use it as a form of foreign reserves for the central bank, they instead sell it to other countries. The reason being can be attributed to the fact that Indonesia's gold mines have historically been managed by foreign companies. For example, Freeport-McMoRan, an American company with a substantial stake in the Grasberg mine, plays a leading role in Indonesia's mining sector. The profits from these mines often flow abroad, and the gold produced is exported rather than being accumulated domestically. Foreign companies typically repatriate their earnings or sell the gold on international markets rather than converting it into an asset held by Indonesia's central bank. This structure means that even though the country is generating a great deal of gold, most of it becomes a private asset rather than a public reserve. In essence, the value of Indonesia's gold production benefits the economy through export earnings, but it does not directly contribute to the official reserves held onshore. Now, just because Indonesia does not have a lot of gold reserves doesn't mean they will continue to not hold gold reserves. The Indonesian government has actively participated in BRICS, which aims to reduce dependency on the US dollar and promote the use of alternative financial instruments, including gold-backed reserves and local currency trade. What that basically means is that they may have some sort of interest in exploring de-dollarization, which would mean they would hold less foreign currencies and more of gold. Secondly, Indonesia has also launched the country's first bullion banks in February 2025. The aim of these banks is to retain more of the gold produced domestically by providing a secure onshore system for gold deposits, trading, and custody. This initiative is expected to gradually increase the amount of gold that is held in the country's official reserves. By keeping the gold supply chain onshore, Indonesia hopes not only to enhance its economic sovereignty, but also to bolster its overall reserve portfolio. Thirdly, another initiative involves new regulations that will require natural resource exporters to keep their export earnings domestically for at least 1 year. While this policy is primarily aimed at strengthening foreign exchange reserves, it reflects a broader strategic shift toward retaining more value within Indonesia's borders. The hope is that such measures could also lead to an increase in the conversion of domestic gold production into official reserves. Now, before we end the video, it is important to understand whether this is okay for Indonesia's economy today. Is it okay for Indonesia to not hold a lot of gold reserves? Well, the answer is yes. There's a lot of economies that are thriving without holding massive gold reserves. The key reason why this is not a major problem for Indonesia is that gold reserves are just one component of a country's overall economic stability. Many successful economies prioritize other financial assets over gold, and Indonesia follows a similar strategy. Gold was once an integral part of a country's reserves, especially back in the days when the gold standard was widely used. Up until the mid-20th century, many countries backed their currencies with gold, meaning that having large gold reserves was crucial for economic stability. However, after the Bretton Woods system collapsed in 1971, most major economies moved toward fiat currencies, which are not directly backed by gold, but instead rely on a country's economic strength, creditworthiness, and foreign exchange reserves. So, as you can see, Indonesia, despite having low gold reserves, is relatively in good shape. But anyway, do let us know what you think. Thanks for watching.